right.
Hi, everyone. I'm so excited to be putting this information out here. We have some incredible experts. My name is Maren Costa, and we are going to talk about investing in a green future and how to move your 401k or any other investments to sustainable funds. And it's sort of like the number one thing that you can do, the biggest impact you can do as an individual, so much more impactful than recycling. Moving your money is the first thing that you should focus on if you can. And this is what this webinar is designed to help you do and make it more easy so that everyone can start putting their money where their values are. So my co-host today is Carolina. Carolina, do you want to say a few words about yourself?
Yeah, thank you so much, Maren. My name is Carolina ALDUEY. I am a coach and I work in marketing and PR. And I'm just so excited because a lot of this information is going to be new to me as well. So I help out Maren, but this is selfishly something that's going to help me out. And I know a lot of the people that I follow who may be interested in investing while being aligned with their values, but they just don't know how, or they don't even really think about investing. So I think this would be just good information for people to have. And I'm going to be playing the role of the novice that I don't have to fake it very much because I'm truly learning all of this information as we go, and hopefully answering some of the questions that you guys have, that the audience has. So excited to get started. Thank you so much, Maren, for letting me be a part of this with you.
Yes, I'm so glad you're here. And then we have two amazing experts here to help share the knowledge that we all need. Alex, since your name starts with A, do you want to start out?
Yeah, I'm so excited to be here. Thank you for doing this, Maren and Carolina. So I'm Alex Wright-GLADSTEIN, and I'm the founder and CEO of Sphere. And at Sphere, we make it easy for everyone to invest their retirement savings in a climate-friendly way. I founded it out of my own experience running my first company, a climate tech company, where we started offering a 401k plan to employees back in 2017. And it ended up taking over 3 years and a lot of persistence to get a single climate-friendly option for our employees. And I just couldn't believe how long it took and how hard it was, and dove deep down the rabbit hole of trying to understand 401ks and ended up learning there was no good reason it should be so hard, and started Sphere to make it easier for everyone else.
And Bonnie.
Hi, thanks so much for having me as well. My name is Bonnie GURRY. I'm CEO at GreenPortfolio. We're an SEC registered digital advisory service, and our goal is also to help you to be able to align your money with your climate values. So we have two services that are available for free to any investor. The first, you can go onto our platform, we can pull in your accounts and just like tell you what your money's invested in right now from a climate perspective. So if you're holding like funds of funds and you don't know what's in there, you probably have somewhere between 8 and 10% exposure to oil and gas if you've never tried to get rid of it. So that's our first service. And if you want more help than that, we can algorithmically match you with a financial advisor who we have vetted and who put climate as a core part of their practice. So you don't have to explain to them that climate's important to you. They already understand that and have a lot of experience and tools to help you start to get your finances aligned with what, climate goals, which we all here, I think, believe to be quite important. So very happy to be here, shining a light on this incredibly important topic.
And that's actually a great segue to say, this is informational only. We are not providing, specific investment advice, but you can definitely dig in and get your own individual advice from definitely from Bonnie and GreenPortfolio.
We are happy to work with whoever comes to us. But yeah, everything here is just to start learning. But yeah, it's not specific to any person's needs right now.
Okay, so let's get started with and Carolina, do you want to start?
Yeah, I'll jump in. And I just want to say too, just real quick before we dive deep into these questions is that I think what we tend to see is a lot of times like issues around, climate are treated very differently than like in how we invest and things like this. And it's like this is a very direct line, to helping helping the planet, helping people that are of the working class, I think in general, who are the ones that suffer most from the effects of climate change. And Maren, you've taught this, you talk about this in your talks, this is what and you've worked directly in this area. So I don't know if you want to add anything to that, but I just wanted to make that known that this is really about bridging those worlds, because a lot of times they seem it's like two very separate
I
things.
think that's a really good point, is that the climate crisis is not just an ecological crisis. It's a symptom of all of these other exploitative systems that we have, like, patriarchy and supremacy and colonialism. And so when we address climate, we are also addressing a lot of the other injustices and oppression that everyone around the world faces.
Yeah.
Except for that handful of billionaire dudes at the top. All right.
Okay. So let's start with you, Alex. We're gonna go into the super basics and ask you, what is a 401k and what are the kinds of investing and what other kinds of investments are we going to be talking about today?
So 401k is something that some people have access to through their employer to help them save money. And anyone can honestly save money anywhere. You don't need to have a 401k to save money. But the reason that they're pretty popular and that you often will hear advice saying start by saving in your 401k before you start saving and investing outside your 401k is because it's a tax protected account. And what that means is you're contributing money to your 401k before taxes have been taken out of your paycheck. So you have, 20, 30, 40% more available to set aside and save if it's pre-tax than if it's post-tax. And the power of that isn't just that there's more money to put aside, but also that even if it's just one more dollar you're putting aside with every paycheck, that money is growing. The interest is making it grow, and that interest compounds over time. So that extra dollar could actually turn into $2 extra in a few years, or $10 extra a few decades down the line. And so that's why it's so powerful to be able to set aside that money pre-tax. And that's why a lot of people will say, first, max out your 401k contributions for the year before you start saving outside of your 401k. Now, more and more employers are starting to offer 401ks because more and more states are requiring employers to do it. I'm based in California, and here, every employer that has even just one employee in California is technically required to offer a 401k. If they don't already, there's a California sponsored one, and more states are kind of following this idea and just trying to make sure that everyone has a way to save pre-tax for retirement. Now, on top of the tax issue, there's also the employer match. Some companies, usually bigger or more established companies, match what you contribute. And this is just free money. Like, I think a lot of people don't really realize, but if there's a match, it's like increasing your salary. It's just more money that your employer will pay you, but they'll only pay it if you're contributing to your 401k. So that's also another really important reason to contribute to your 401k, is just to get the extra free money that's available for you.
Cool. And what kind of other funds can we be looking into as well, aside from 401k?
Oh, yeah, of course. So if you don't have a 401k available to you from your employer, there's something called a solo 401k for people who are self-employed. There also is something called an IRA, which stands for individual retirement account. These are all tax protected ways to save as well, either pre or post tax, but better than saving in a regular brokerage account and investing, because you are going to have some of those tax benefits. They all have limits set by the IRS of how much you can contribute per year. And so you might want to max those out before, if you have even more money to invest, then you can start saving in a regular brokerage account. And then there are even things like, a lot of states offer college savings accounts called 529s. And those are sometimes tax protected, they're federally tax protected, sometimes state protected as well. Ways to save if you have kids who you want to save for college. There are pension funds. If you're in a union, oftentimes you'll have access to a pension, or if you're at an older company. So there are a lot of different ways that people can be saving for retirement or for other purposes.
Awesome. Cool. So I'll keep jumping in. I'll keep jumping in unless you want to do 1, 2, 1, 2. Maren.
No, I'm sorry. I didn't know we were going to do that. No, you can
No,
just.
no, no, I'll keep going then. Okay,
Yeah.
Bonnie. So, okay, Bonnie, can you tell us a little bit more about how GreenPortfolio fits in this space?
Sure. So let's say you were just overwhelmed by the alphabet soup of all of these different financial options, right? So we were just talking about the different kinds of investment accounts that are out there. Like she didn't even get around to 403B, which is if you work for like a public entity, that might be the vehicle you're using. You can also just open a plain old brokerage account where you can invest. So if you find that very overwhelming, because we haven't even started talking about what you're investing in once you figure out which accounts you should be using, right? We work with financial advisors who this is all they do. They like look at your mess of accounts between you and your spouse and everywhere you've ever worked, and they kind of organize it. They look at, where are you in your life? What are your goals? In particular, our advisors, in-network advisors, look at what your values are, and they start building out a plan. They say, let's look at all these accounts, see which ones we can combine, see how we can see what fees you're paying and to whom. Let's see if we can find the right kinds of investments that match, your goals and values, and start to really kind of just build. It's you're working with an expert who understands all of these different things really well. And you can do a lot of that on your own, just starting to take account of where all your money is. But GreenPortfolio is really there to connect you with an expert advisor who knows all this stuff in and out, including, which ones have a tax advantage and when you should be, really dipping into this account versus that account. Because it does get very complicated as your financial life gets more complicated. So to us, this is another thing that if you're Gen X or millennial, it's almost like a subscription to someone who helps you manage this really complex topic.
And how do financial advisors get paid? I mean, I know they're different, but tell people a little bit about what's the cost here to the individual.
Yeah. So there are a number of different ways financial advisors get paid. If you are working with a financial advisor and you do not understand their fee structure, they are obligated to provide to you documentation explaining how they are compensated. The vast majority of advisors get paid as a percentage of, usually around like 1% of the amount of money you give them every year. And, there are also additional ways they earn revenue, which is if there are certain funds that perhaps their company is creating, they may also earn some revenue because they put you in those funds. So it can be kind of complicated, but they should be happy to provide you with an explanation of the value they're providing to you and how much that's going to cost. And if they are not, that's probably not the right advisor for you. You should be a very open, trusting relationship with the person you're working with.
Awesome. So Alex, same question for you. How does Sphere fit into this sustainable finance space that we're talking about right now?
So at Sphere, we offer fund products. We have one fund so far. It's called the Sphere 500 Climate Fund. And it's the first climate-friendly fund that was created specifically to check the boxes of what 401k fiduciaries look for. Now, employers are fiduciaries, which means they have a legal responsibility to choose fund options for their 401k plans that make good financial sense. They need to make sure the fees are reasonable on the funds that are offered. They need to make sure that the performance is reasonable in these funds that are offered. They need to be well diversified. And there are a lot of lawsuits actually in the world of 401ks where there are these law firms that specialize in the type of class action lawsuit where employees sue their employers, most often for having funds that are too expensive in their 401ks, but also for having funds that have underperformed and the employer hasn't noticed that and been tracking it and replacing them with better performing funds. So as a result, there's been a big movement towards what's called index funds. Another word for index funds is passive funds. And it just means it's a kind of fund that doesn't have anyone picking stocks, trying to beat the market and like get the, make the smartest picks. Instead, you're just investing in the stock market at large. The most popular kind of index fund is the S&P 500. It's the most well-known, and it invests in the top 500 biggest US companies. And those types of funds can be really inexpensive because it's just a calculation, it's a formula, and it's not someone trying to be smart and beat the market. There haven't been any climate-friendly index funds until we came along. And so we're the first climate-friendly index fund, which makes it more affordable. So employers might not have to worry so much about those excessive fee lawsuits. And also it means that it's just tracking the market at large. And so it's the same risk return profile you would expect from an S&P 500 type index fund. And because of those things, it's much easier for a 401k fiduciary, those employers, to decide to add it to their existing 401k lineup. And we did this because we realized it wasn't, back when I was trying to get climate friendly funds on my first company's 401k plan, it wasn't like the financial advisors advising my company on what funds to offer were against the idea of climate friendly investing. They were trying to help me. They were trying to help me for over 3 years. They just couldn't really find any good options that met the criteria they like to follow. And so that's why we launched this fund. It's really just to check those boxes. And anyone can actually invest in it because it's a mutual fund. So if you do have an employer 401k, you can request for your employer to add it to your plan. And if you are self-employed or just investing in some other way, you can just invest directly in that mutual fund through any type of account.
And if you had a financial advisor, for example, you could just tell your financial advisor, hey, I want to put some of my money in the Sphere Fund.
Exactly.
Yeah, you can ask and so one other thing is, like, we've been talking a lot about 401ks or perhaps a 403b, if that is, the main vehicle you have access to through your employer. But for most younger people, you work at many places over your lifetime, right? And you are not obliged to keep your money in your old 401k or 403b that you had at an old employer. And it's one of the first things I try to recommend to people who are starting to like look at their money. I'm like, do you even know which accounts you have, where they are? Because just because your former employer 10 years ago chose certain funds that they thought were appropriate, you can move that money into an IRA and invest in anything you want. You are no longer beholden to the ones chosen for you. We have a very, in my opinion, paternalistic system in this country for how we have set up retirement. And it's, you can give yourself a lot more choices if you know where your money is and what choice, what options you have. If you kind of consolidate everything into an IRA that you control. And then you can decide yourself if, the Sphere Fund is right for you. And you can talk to your advisor and say, hey, I heard about this. Do you think this would be a good option for me? And they will take a look and see, like, based on your risk profile and all of that, because perhaps not, like, I don't know your situation, right? But it is, you should at least have the choice, right? And I think that's really, what got me into this business, and Alex as well. It was just like, I wanted more options. I wanted to figure out what else I could be doing with my money. And what can other people be doing, right? Because we aren't stuck in this system if we don't want to be.
I know so many people who have multiple 401ks languishing out there. And so that's such a good point. And that's something that that's like the first thing that your financial advisor would help you with. They can help you roll over those 401ks into an IRA or whatever you decide to do. But yeah, that's a great first step. Consolidate.
Yeah.
And I just want to get really granular and not assume anything, but just because I know some of this too, a fund, just to break it down, is just instead of you buying one stock, right, that is like super expensive, like I don't know how much the Apple stock or whatever is now, but like they're usually super expensive. But instead of buying one, you buy a little fraction of many into a group, and that's a fund, right? Correct me if I'm wrong.
Yeah. So a fund is where a fund manager pulls together money from a lot of people and then invests across a lot of stocks. Exactly. So you own shares in the fund, and then that fund owns shares in all of the underlying stocks that make up, in our case, the Sphere 500 index is the index that the Sphere 500 fund tracks. And so we're investing in all of those companies, and then our investors are investing in the fund.
Okay. So, okay, Bonnie, given the current chaotic market that we're in, right? Should we even be talking about moving money or investing during this time?
So I think if you're feeling nervous about how things are and how your money is right now, it's better to confront the problem head on and see what's happening. And at least know what you're invested in, know where your money is. Go and find all your different accounts and figure out what they're up to. And this is something that like you can do that's in front of you, right? Like if you've been involved in political activism, there is nothing more annoying than a person who just reads the news and has a lot of opinions and is very nervous. It's like, no, go do something, right? Like actually try to foment change, actually try to change our system. And I feel like right now is a good time as well to at least understand what is the volatility of your investments currently. Like if you have no idea, right? Maybe you're nervous for no reason, so at least start to get a handle on it and understand what your money is up to. What is your exposure? And so maybe it's not a right time to move, right? It really depends on a lot of different factors. Like advice given to a 25-year-old will be dramatically different from advice given to a 65-year-old. They just have very different risk profiles and needs and concerns, probably, right? But so it really depends on your situation. But at the very least, I think ignoring it is certainly not going to make you feel better. And so, this is certainly something you can do to make your own nervousness subside a bit, but then also realize that by starting to align your money with your values, you might also be able to start making the systemic change that we're all looking for.
Yeah, and I would just add to that, the kind of most basic financial advice you'll hear if you listen to any, financial podcast or influencer, et cetera, it's just start doing it now. Like just start putting a little money aside every week, every 2 weeks, every month, but just do it consistently. And it's the people who do that consistently, maybe you're not going to buy a latte anymore, and instead you're going to put that money into a savings account that you'll start investing. It's that consistency of doing it all the time through the ups and downs and wild swings of the market, or the great times of the market when it's doing wonderfully. It's if you don't pay attention to that and you just stay consistent, those are the people who tend to do really well in saving for retirement. So just start if you haven't already, and stick with it. That's generally the most fundamental advice.
Makes sense. So, Alex, we'll stay with you. What are the top line cliff notes on sustainable investments? Like what actually makes a fund sustainable or aligned with our vision of a cleaner, greener planet?
So you could ask this question to 10 different financial advisors and probably get 10 different answers. And the reason is everyone has a different opinion on what makes an investment sustainable. When I was trying to get something climate friendly on the IR Labs, my first company's 401k, I had some specific ideas and I wasn't seeing options that met them. There's this term called ESG that I kept hearing, and I didn't know what it meant. I didn't come from the financial industry. And so I looked it up. I saw that it stood for environmental, social, and governance investments. There's this other term, SRI, some people were throwing out. It was socially responsible investments. Finance people love acronyms. You will learn quickly. But even though they have these acronyms, they actually don't have any consensus across the financial industry as to what these things mean. There's no actual definition of SRI or ESG beyond the words that the acronyms stand for. And so it turns out different fund managers will interpret that differently and do entirely different things in how they invest that money. And so it's really important to not just take things at face value when it comes to finance, unfortunately, and look under the hood a little bit. That's why what Bonnie offers at GreenPortfolio is so helpful. They help you really understand what are you actually invested in, so you don't have to trust the label. At Sphere, we decided to make it as simple and transparent as possible and in a way that really aligns with our values. And for us, it comes down to two simple things. Number one, don't invest in the fossil fuel industry. And number two, for the companies you do invest in, vote your shares to encourage them to do better when it comes to climate justice. So I'll dive into each of those briefly. I don't want to take too much time, but on number one, don't invest in the fossil fuel industry. There's one industry that if it didn't exist, climate change would not be a problem. If we were not taking oil and gas and coal out of the ground and burning it, climate change would not be the issue that it is today. There's a lot of distraction when it comes to climate change on, oh, we have to measure our footprints, and oh, agriculture is bad, and these other things are actually surprisingly bad. And I honestly think a lot of this distracts from just the core simplicity of taking carbons out from underground and putting them in the air heats up the planet. And the companies that are responsible for that are the fossil fuel companies, oil, gas, and coal. And if we remove the power from them, if we say, hey, we're not going to give you our money anymore by investing in them, we're saying, good job, keep doing what you're doing. Keep lobbying in DC to prevent common sense legislature from getting passed. We actually, scientists and policymakers have a very clear roadmap of what we can do to turn around climate change. Why haven't they gotten that passed into law? Fossil fuel lobbyists. And so by taking our money away from them, we're taking away their power to keep the status quo and keep doing what they're doing. And that's the fundamental reason to not invest in oil, gas, and coal if you want to have an impact on climate change. But there's another really important reason to not invest in this industry. And it's just purely selfish, which is it's an industry in decline. Solar, wind, batteries, electric cars have been taking off in popularity. And, however you might feel about Elon Musk, I am actually grateful to him for helping to make electric cars super popular. And that's true across people, regardless of how they voted. They're buying, whether it's Cybertrucks or other types of cars, which is fascinating to me. Solar and wind and batteries combined are less expensive for power generation on the grid than traditional fossil fuels are. And so the market economic forces are there, no matter what policies are put in place, that have already started to make the fossil fuel industry one that's in decline. And so if you just want to protect your own money from the losses of these fossil fuel companies, don't invest in them from just a purely financially selfish perspective. Now, for the rest of the economy, most companies aren't perfect. Most companies do some good things, do some bad things. And if you wanted to only invest in really good companies, it'd be hard to find any companies to invest in. But as a shareholder, you have the ultimate power to hire and fire the board. Most people don't know that because most people aren't actually voting for board members. Every time that a ballot comes out, it's actually the fund manager, the person who manages the fund for you that you're invested in, who's voting on your behalf and not even asking your opinion. So you don't even know what's happening. And they're voting against 98%, or 98% of the time they're voting against shareholder proposals that have to do with climate change. So you're both hiring and firing board members, and they're also just issues that get put in front of shareholders. And we're all having our shares voted on our behalf against progress at all the biggest companies in the economy without even realizing that's happening. And that's despite the fact that over 80% of Americans are worried about climate change and want to do something about it. So what we do at Sphere is we always vote in favor of those proposals, which we think sets up companies for long-term financial success too. So it's both selfishly good for your investment and also good for the planet. So those are the two things that we think are most important when it comes to sustainable investing.
Great. Bonnie, do you want to add anything to that?
No, I think that's an incredible encapsulation of some of the power that we have to start making these systemic changes. People, there's a lot happening behind the scenes that are keeping all of the status quo continuing, right? That's what makes it the status quo. But there's a lot that we can be doing. And you are currently paying fund managers to vote against things, that you are really working towards. Like you might be a climate activist and every day out doing the good deeds. And then you are paying someone because every ETF or fund that you're investing in, some of that, a certain portion of it goes to a fund manager. Like Alex is a fund, well, maybe not Alex personally, but Sphere is a fund manager, right? They are paid to manage money on your behalf in this manner and vote on your behalf. And you are paying someone right now to vote against exactly what Alex said, just common sense measures often that could be really making a difference. So I do think that's a super powerful message.
Yeah, agreed. Agreed. Maren, I felt like you wanted to say something there, but
Just that I have been a part of submitting several shareholder resolutions to the big companies that I was at, and they are very common sense. And we've even had big fund managers vote for it, but the company always writes a response. So they get a rebuttal in the literature that they send out that gives everyone a chance to vote. I didn't ever pay attention to this until I became a climate justice activist. I was even at these big companies, but I wasn't really paying attention to how these shareholder resolutions work. And so you get this booklet and you have this great resolution, and then the company always puts in their rebuttal, and it's something like, oh, we're already doing that, or we've done enough, or we're working on that, but it's not the best time to do it right now, or they just have some BS answer that, and then when the uninformed person is looking at that information, they're like, oh, Amazon says I shouldn't vote for this shareholder resolution, so I'm going to just follow Amazon, and it's just another way of greenwashing, really.
And I will say the big fund managers, their policies are typically just always vote however the board recommends. Think about that.
Yeah.
Board members are highly paid individuals at these big companies. They make a lot of money to go to these board meetings a few times per year, and they're paid on the short term. Like their compensation is short term, like they are motivated to maximize short term value of the companies, quarterly returns of the companies. That's how they're financially compensated. As shareholders, especially those saving for retirement or for a longer term time horizon, we actually want to maximize the long term value of a company. Let's think about a practical application of that. Putting solar. There was a proposal to put solar on the roofs of some Costco facilities. The board recommended against. It's an upfront cost, an investment. As a long-term shareholder, you're going to make back that investment in 2 to 3 years and then start paying less every single year for electricity. It's it makes complete sense to make this investment financially if you're looking at a time horizon of more than 2 to 3 years. And yet, board would recommend against it, which means all the major asset managers who are typically in 401ks vote against it. And so it can't get passed, even though all of those people, those asset managers are representing, a large part of them are in these investments for decades. And actually, it makes financial sense for them to do it. So it just shows the conflict of interest here. And that's why at Sphere, we think it's so important to start moving your money to managers who are aligned with your long-term interests.
Yeah. So I think the overall idea there is that we have a lot more power than we even realize, right, when it comes to making these decisions. So with that said, I mean, Alex, you kind of address this, but we'll go into maybe a little bit more detail because from what I understand, these investments can be more profitable, longer term, than the investments that your 401k or whatever other funds might be in now, right? So how is that? And can you give us some examples of that?
Yeah, the way we talk about that, I already talked about the forward-looking projections of these new technologies taking off, and so demand for fossil fuels is going down. But it turns out, even on a backward-looking basis, which is what we talk about with these 401k fiduciaries, already the fossil fuel industry has had the worst returns of any sector of the economy over the past 10 years. If you just look at the energy sector, S&P Global, the company that makes the S&P 500, does these industry sector index indices. So you can just track how has each industry done. And energy is just code for fossil fuels because the solar and wind companies get classified as tech. So really the only companies in the energy sector are all fossil fuel companies. And if you look at the energy sector returns over the past 10 years, it's the lowest of any of the sectors that S&P tracks. Same thing over the past 15 years. Same thing over the past 20 years. So already this has been an industry in decline. Some of the major fossil fuel companies in this country used to be in the top 10 biggest companies in the US. None of them are now. They've all gone way down that list. It's all tech now that's been driving growth. And so if all you're doing is excluding those oil and gas and coal companies, over those longer term time horizons, if the future is reflective of the past, you might actually turn out doing better financially.
Yeah. Yeah. That's good news.
Mm-hmm.
Good to know. So if someone already has a 401k through work, how can they check if it's aligned with sustainability or climate justice? And what do we do? What do we need to do if it's not? How can we advocate for this change from, say, our corporate jobs?
Yeah, so I mean, for me, I would say like the first thing you could do is just like run it through GreenPortfolio's platform to start to learn more of what you're invested in. And then if it is held somewhere you used to work, you have a lot of options now. So the first thing you should do is move it into an IRA or a different kind of vehicle where you can, if you want, you can keep the same funds you had before. You don't have to change, but now you have access to the entire market instead of just the few funds that your former employer chose for you. If you are still, if most of your money or you have an account still at your current employer, you can go to your employer and try to advocate. And I know there are people in this room with me who have done this much more, but you can try to advocate for them to start adding more sustainable options to the menu that you have available to you. It may be a long road, but when you consider how large your company is, this could have a really big impact, right? To at least give people choices, right? Like I think that's so powerful. And to me, the fact that we are so beholden to what our employers chose for us is such an odd system. But it's the one we're working in at the moment. It's already amazing that you can move your investments from a previous employer. We have a lot more choices and options than we did 5, 10, 20 years ago, honestly. Things have been moving in the direction of giving individual investors more choice and more voice in what they're doing. It used to be all your money was in a pension and you had zero, and I mean zero, influence on how it was managed, right? That was our main form of retirement savings in the past, right? With Social Security and pension, neither of those did you have really any say in how the money was managed. So you do have a lot more agency, and you should feel free to use that because it's your money. You earned it. So you should know what it's up to and decide what you want to do with it. That's my point of view anyways.
I'll add just a couple more like kind of nitty gritty specifics. If you're at a company, you're the people who manage the 401k plan, generally they're in HR or something. You got to figure out who those people are, who are the ones that are actually making the investments. And you can kind of set up a meeting with them. Say you can send them emails every quarter saying how can we get the money more out, into clean funds. It would be good for our brand or however you want to position it, and try to offer, ideally a default 401k plan that is already, climate safe. Find that. Because most people, they start at a company, you come in and it's like, do you want to be in the 401k? Yes. How much of your salary do you want to put in, whatever percentage, and then you click a button and usually ask you, when do you want to retire, so that it can kind of roughly calculate your risk over time and adjust as needed, and then boom, you're done, and nobody looks beyond that. And so if we want, for the biggest impact, it would be great if the whole company could move. But then a lot of times companies do offer what they call a little open brokerage window, and you can find out from those same investment people, get advice. They'll let you kind of move money and manage it yourself. And then there's also sometimes they've added a few individual funds, maybe like, the Sphere Fund would be an example. But there's like the Parnassus Fund, or other funds that are like green, and you can opt to move some of your money. Now, most people don't do that. It's like 3% of people, and they're usually the VPs and higher, because they have a lot and they know what they're doing. But it's an option if you want to get under the hood.
Yeah. And at Sphere, you can go to our website. It's oursphere.org, OURSPHERE.org. And we have an example email that you can send to HR. So if, it can just get you started, it always helps to personalize things, or you can just copy and paste. And it's a great way to get things started, is just send an email to HR. And in some companies, that's all it takes. Someone sends a request, the HR person brings it up with the external 401k advisor that manages their plan. And 401k advisors really care about keeping customers happy. It's a competitive market for them. They don't want to lose their customers. Some of them have actually lost customers over not moving fast enough on offering green options. And so these days we are finding 401k advisors do oftentimes just hop to and like add a climate friendly option when the request comes in. At bigger companies like Maren's experience at Microsoft and Amazon, it can be a longer road to push things. And so sending that first email is a good step. And then you can channel your inner Maren and email other employees who might care about this too. Like try to create an employee interest group, have everyone send emails to HR, maybe make a petition. Organizing employees can do a lot. We've seen cases where one employee actually just posted on the all company Slack, and that Slack message got so many hearts and thumbs ups and fires and all the emojis that even though she had been emailing HR and then the CEO for a few months and they hadn't done anything, that Slack message with all the likes actually got them to do it. So there are different ways to organize and get attention. But at the end of the day, it's hugely impactful to move your own money. Now multiply that by the number of employees at your company. For Maren's case, at Microsoft, there are $50 billion in that single 401k plan. Getting those moved towards climate-friendly options could literally take billions of dollars away from the fossil fuel industry.
And many people don't. Sorry, go ahead.
Oh, and I was just going to start that like tens of billions of dollars voting the right way on these shareholder proposals. So, you think that like Elon Musk is no longer a good CEO for Tesla, like have your shares auto like voted to get him removed as CEO and someone better put in place. Like this is how we create change at scale. And it might not just be your 401k. It could be if you're saving for your kids' college and your 529. There are groups of parents who are just trying to get state 529 programs to start having climate friendly options. Or it could be you're in a union and your pension isn't investing in a climate friendly way for your union. Well, you can lobby for them. There's so many ways to influence pools of money, and the scale is enormous. So you can really claim your power here.
Yeah, what most people don't know and what came as a surprise to me is that Vanguard is, it moves a little bit, but either usually one or two of the top investors in the world in fossil fuels. That's our retirement money investing in fossil fuels. So actively sort of destroying our future as we save for our retirement. It just doesn't make a lot of sense.
Yeah.
So true.
And
I have a lot of power to change it.
Yeah. And I read a statistic last year about the amount of people moving into more sustainable funds. Do you know that? Like, I don't want to put you on the spot or anything. I just know there's like a very big number of people switching. Like this has been for the past 10 years, like we've seen such a huge increase of people investing in green, funds. I don't know. I wanted to throw that out there because there is a huge cultural shift happening.
So there have been sustainable funds have been growing at a very good clip. Some of them have been changing their name lately. Things like that have been happening. However, on the whole, there is a very large movement, and much of that is the fact that we're in the middle, at the very beginning of something called the Great Wealth Transition, which is a very nice way of saying that Gen X and millennials are about to inherit a ton of money from the silent generation and baby boomers. And we just inherently have very different priorities than previous generations. One of which is that women are going to suddenly have way more wealth than we've ever had before. So that's one thing. But also, if you look, finally, and a lot of this, though, is that the younger generations care more about this topic and are willing and interested in finding ways to align their values with their wealth. And so if you are interested in being part of, giving products and services to the big investors of the next 10, 20 years, this is where it's at, right? Like we are very interested, willing and able to find ways to get the services that we're looking for, right? We are very used to switching providers. We're very used to shopping around. And I think that it really is starting to give the financial services industry a wake-up call. Because everyone's kind of moving their money around in a good way, I think. So it's a big opportunity where if we can really move the great wealth transition into more sustainable investing, it will really start to create the systemic change we're all hoping for.
Right. Okay, I know we're at time, but I'm going to see if we can fit in this one last question, if it's okay with both of you,
Sure.
or all three of you. Okay, what's one simple shift we can make this week with our money that moves us closer to investing in a green future, even if we're just starting out?
I would love to jump on this.
Go ahead. Go ahead.
This is my favorite question. So I would love to have you pop over to greenportfolio.com, try out our services, see where your money's invested. If you are just starting out, though, let's say you haven't started investing yet, and all you have is a checking account where you're putting your paycheck. You can choose a bank that also is putting your deposits to work in a way that you agree with. There are banks that are like, we don't put our money into fossil fuels. If you're at Chase, if you're at Citibank, any of these big names, they directly fund fossil fuel projects. Okay, they take your money and they give it to fossil fuel companies. You don't have to do that. You have a right to choose what financial services match your values. And that is from banking to investments, financial advisors. I'm hoping we'll get insurance on board soon. All of these financial services have a part in this system, and you have a part too, and you can make a choice about what your money is up to. So it's super empowering once you realize it, but it does take a little bit of homework. But it feels so good when you're using services that are building the future we want instead of causing the damage that we see in front of us every day. So yeah, it's super empowering, and it can be fun if you look at it the right way, I think. But
Alex, if there's anything you want to add to a loop.
Yeah, I would say, I mean, I totally agree with that. And local credit unions can be one great place to look. Or there's one called Clean Energy Credit Union. You can join from anywhere across the country.
Fantastic, yeah.
And then I would also just say, take a look at your 401k, see what fund options are there. I'm guessing probably no climate friendly ones. You can type the fund name into fossilfreefunds.org to see how heavily invested they are in fossil fuels. And then email your HR, take the template from our website if it's helpful, and get the conversation started to get climate friendly options available for you and your colleagues.
Thank you so much, both of you. This has been super fantastic. As much as I have dipped into this, I learned new things today. Carolina, what do you think?
I mean, I learned everything today, and I hope everybody else did too. I think this is just invaluable information, and I think we're waking up to all these things now. We have the power. We're impactful, like you said, Alex, if we make a change for ourselves, but also understanding that we're extremely powerful in numbers, which is what Maren teaches us, which she's taught us the past few years. So no, we both appreciate, you sharing this information with us, and hopefully a lot of people can find value in this and start moving their money to align with their values. So